my name is Del Rounds and I run the Rounds team here at RE/MAX Fine Properties. If you're watching this video, you're taking the first step in determining what your options might be. Keep in mind that you're not alone and many people are facing the same challenges you are. My team has extensive experience working with short sales and bank-owned properties, and we can help you. These are very complicated and serious decisions, and the first thing you should do is seek out professional guidance and assistance in navigating through these difficult choices. Now, here are my team members that will briefly cover what your options may be, including a brief message from a real estate attorney. We advise before making any critical decisions, you consult both a real estate attorney and a certified public accountant. Thank you for your time, and I hope you find the following helpful and informative.
Hi, my name is David Tucker. Your first and most obvious option is simply bringing your loan current. This means making all your missed payments in addition to penalties and interest. This is the simplest way to avoid foreclosure and also the least damaging to your credit. Though if you have missed multiple payments, damage to your credit has already occurred. There are many factors to consider, and only you will truly know what is best for your individual financial picture.
Hello, my name is Darren Tackett, and I'm going to talk about option number 2, loan modification. A loan modification, or loan mod for short, is a process where the original terms of the mortgage are modified or changed by the lender and the borrower. Any change in these original terms is considered a modification, but in the current housing environment, it typically refers to a change in terms based upon the borrower's inability to remain current on their payments. There are multiple ways a loan can be modified, including a reduction in the interest rate or a change from a variable to a fixed rate, a reduction in late fees or other penalties, a lengthening of the loan terms, capping the monthly payment to a percentage of the household income, and in some cases, even principal reduction. To do a loan mod, the borrower can be current, late, in default, in bankruptcy, or in foreclosure at the time they apply for the modification. The lender may make these modifications with the hope that the borrower will be able to afford the lower payments and that a performing loan will be better in the long run than the proceeds from a foreclosure sale. The federal government also has passed some loan mod programs which motivate lenders to modify loans for borrowers by paying them bonuses for successful mods. Something else consumers should be aware of are companies who charge a large fee to handle the loan mod for them. Many of these foreclosure rescue companies are being pursued by the authorities as scams and are not legitimate sources of help.
Hello, my name is Antonio Guerrero and I'll be discussing option 3, short sales, which are a proactive way for banks and homeowners to cooperatively sell a property for current market value versus the amount owed on the home. With today's current market conditions, a short sale has become a successful alternative to foreclosure, minimizing negative credit impact for those that qualify. In a short sale, we market and sell the property just as we would in a traditional sale, along with the required documentation that the banks need to authenticate the hardship. A closed short sale is viewed upon as being considerably better on credit reports, which are extremely important when considering future credit checks for employment and other financing options, such as vehicle purchases and credit card interest rates. Other than bringing your loan current or renegotiating your mortgage debts, a short sale is the best option that exists in today's market.
Hello, my name is Tiffany Young, and I'll be giving you a brief overview of the bankruptcy option. Generally, an individual declares bankruptcy to obtain relief from debt. This is accomplished either through a discharge of the debt or through a restructuring of your debt. When you file a voluntary petition, the bankruptcy case can begin. In Chapter 7 bankruptcy, you surrender your non-exempt property to a bankruptcy trustee, who then liquidates your property and distributes the proceeds to unsecured creditors. Under Chapter 13, a trustee will sell most of your assets to pay off creditors. However, certain assets are protected to some extent. We advise you to consult an experienced bankruptcy attorney who understands what your options may be. The downside of bankruptcy is the effect that it has on your credit report that may inhibit your ability to finance in the future. You do not have to file bankruptcy if you do a short sale. So if your debt is directly related to your primary home, we encourage you to explore the short sale option first.
Hello, my name is Dax Watson. I'm a lawyer and one of the founding partners of Mack, Drucker & Watson. We focus our practice in the area of real estate law, and we can guide you in this difficult time. You've already heard 4 of the 5 options you have as a homeowner in dealing with a distressed property. The 5th option and last option is truly that, and that typically should be the last option you consider, and that is allowing your home to be sold through a trustee sale or foreclosure. A foreclosure or trustee sale occurs when you have defaulted on your mortgage and the bank sells the home at a public auction. To do so, the bank has to follow certain rules and laws, and it's not an overnight process. But once it occurs, there are several problems that can arise for you. For instance, a homeowner who loses a home to a foreclosure is likely going to be ineligible for Fannie Mae-backed mortgages for 5 years. In the case of a short sale, that limitation is only 2 years. A foreclosure can impact a credit score by 250 to 300 points. By comparison, a short sale's impact can be as little as 50 points. And a foreclosure action is an actual lawsuit that has been filed against you in state court. For certain loans, a foreclosure action is actually a method in which the bank can perfect or solidify its ability to pursue any amounts of money you still owe under the loan after the home is sold. It is a way they can potentially come after you for what we call a deficiency. These are just a few examples of the pitfalls of a foreclosure. That is not to say that a foreclosure is never an option. It is just one that has its own risks and downfalls that you should be aware of. Again, before simply walking away from your property or resigning yourself to a trustee sale or foreclosure, consider all of your options, educate yourself, and make a sound decision.
Remember, you're not alone. Our expert team is here to help you. We also provide relocation assistance at no cost, helping you make your transition as smooth as possible. Thank you very much for your time. We hope your first call is calling the Rounds team.